Hello, everyone. My name is Mo Zulfikar, and welcome to another episode of Income Investors. With me today is John Whitefoot. Before we start talking about this income idea that John has come up with, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. Energy stocks took a big hit in 2020, which in hindsight wasn't a big surprise. The pandemic shut down the global economy and the demand for oil and gas evaporated. In the opening months of 2020, many energy companies cut their dividends to preserve cash, and that made sense. But there was one oil and gas exploration and production company that didn't miss a beat, and it was Kimball Royalty Partners, traded on New York Stock Exchange under symbol KRP. John?
Yeah, thanks, Mel. Kimball Royalty stock cratered during the opening months of the pandemic, but it still managed to pay a quarterly dividend throughout the year. Now, as an energy stock, its payouts fluctuate based on supply, demand, and pricing. Its quarterly dividend was lower in 2020 than it was in 2019, but it was still respectable. In 2019, it paid out $1.56 per share. In 2020, the cut was to 68 cents per share. It's rebounded since then, though, up to $1.32 per share in 2021 and $1.99 per share in 2022. Energy was the best performing sector in 2021 and 2022, so the big payouts were warranted.
Energy hasn't really fared well in 2023, but I have to ask, did Kimball Royalty Partners not get the memo?
Yeah. In addition to reporting record fourth quarter and full year 2022 results, the company reported record first quarter 2023 results and boosted its 2023 production guidance. It also recently completed a $141 million mineral and royalty acquisition, which is actually the second big acquisition it's announced since December. Despite the headwinds, though, Kimball Royalty Partners units are up 3.3% year to date, but they're down 7.2% year over year. The outlook for Kimball Royalty Partners is much more bullish, though, with Wall Street analysts providing a 12-month share price target of $19 per unit to $24 per unit.
Okay, John, tell me what's so great about Kimball Royalty Partners?
Well, Kimball Royalty Partners and its subsidiaries acquire and own mineral and royalty interests in oil and natural gas in the U.S. Its portfolio includes over 16 million gross acres and more than 150,000 net royalty acres in the U.S. lower 48 states, with significant positions in the highest growth basins. This includes 92% of its production from the 7 premier U.S. onshore resource plays, and that's the Permian Basin, Eagle Ford, Bakken, Appalachia, Mid-Continent, Haynesville, and the Rockies. As of March 31st, Kimball had a record 94 rigs drilling on its acreage, up from 92 rigs in the fourth quarter of 2022. And to put that number in context, that represents a huge 12.8% market share of all rigs drilling in the continental U.S. And its top operators include well-known oil and gas companies like Exxon, Occidental, Chesapeake Energy, and Devon Energy Corp. Now, as a limited partnership, it doesn't pour money into new wells. Instead, it milks the positions it already has. But its high-quality, diversified asset base still has, with current technology, 19 years of drilling inventory across its major properties alone. But the company estimates that minor properties could potentially add up to 20% to its net inventory. Yeah, exactly. Since its 2019 IPO, Kimball has announced 8 major merger and acquisitions. In fact, it invested $1.2 million in M&A since its IPO. And it's increased its portfolio by around 12 million gross acres. For example, this past May, it closed on the previously announced purchase of mineral and royalty interests held by MB Minerals LP for $140.8 million. And this past December, it closed on a $270 million acquisition of the mineral and royalty interests held by Austin, Texas-based Hatch Royalty LLC.
You know, over the past 1 year or so, energy market has been, to say the least, is rough. And this company reported record Q1 results. What's happening here?
Yeah, absolutely. Yeah, for the first quarter, ended March 31st, Kimball reported record run daily production of 17,014 barrels per day, up 10.5% from the fourth quarter of 2022, with a 21.4% increase in oil production. This is important, that total did not include any days from the company's January acquisition of MB Minerals, which is expected to close in the second quarter of 2023 with an effective production date of April 1st, 2023. Now, just some quick numbers. First year revenue almost doubled to $66.9 million. Net income increased 243% to $28.9 million. Net income attributable to common units was 37 cents per unit, compared with a loss of 20 cents per unit in the first quarter of 2022.
Let's talk about the most important thing, the dividends. What's happening here?
Yeah, absolutely. The company's board approved a first quarter cash distribution payment, 75% cash, available for distribution, 35 cents per unit, or $1.87 per unit on an annual basis, for a yield of 12.77%. Again, for context, the US inflation rate is 3%. Kimball used the remaining 25% of cash available for distribution for the first quarter to pay down a portion of its outstanding borrowing. Yeah, since May 2020, which excludes the current 25% pay down in the last quarter, Kimball has paid down approximately $99.2 million of outstanding borrowing under its revolving credit facility. And the company going forward has said that it expects to pay out 75% of its projected cash available for distribution on a quarterly basis, and use the other 25% to pay down a portion, to continue paying down a portion of its outstanding borrowing.
And it also boosts its 2023 production guidance, which bodes well for its dividend and the stock.
Yeah, exactly. In May, the company upped its 2023 production guidance. And this is connected to the previously announced closing of its mineral and royalty interest held by MB Minerals LP. It expects to report record daily production, which at its midpoint for the second quarter is up 7% over prior guidance, and up 10% over the midpoint for the third and fourth quarters.
All right, John, thank you so much for talking about Kimball Royalty Partners LP. That continues to be a great energy play, reporting record results, strategic acquisition, and strong guidance. Thanks to strong cash generation and industry tailwind, it is able to provide a reliable inflation-crushing dividend and strengthen its balance sheet. That's it for today. We'll be back with another video soon. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.